Aside of that, what else is the focus today? And Dr. C.K. Narayan is here to tell us exactly what the trade setup is like and his observations. C.K., what is it that you're noting down this morning?
Well, good morning, everybody. I think, last week the market ended a bit softish, and all of us were wondering if the decline were to continue, where would we put our money? Now, traditionally, IT, pharma used to be the place where people would flock to whenever the markets were on a retreat. But of late, these two sectors have been taking a bit of a pounding. Recent rally notwithstanding, of course. But then if you look around the rest of the sectors, then you can probably zoom into FMCG, which, as this chart actually depicts, this is FMCG versus Nifty, FMCG index. And you can see the blue line, which is FMCG, has been consistently outperforming the Nifty for well over 6 months. If you take a 1 year period also, it's been outperforming. And if you take a 1 month period also, it's been significantly outperforming the Nifty. Now that gives us an idea that FMCG could possibly be a place for us to take some, a place for us to hide. Now why do we think that? Because most FMCG stocks are into a very, very strong trend. That is number one. Number two is FMCG majors are well weighted in the Nifty. You know that Hindustan Lever, ITC, etc. are extremely heavy weights on the Nifty. Third more significant fact is that the FI ownership in FMCG stocks is also a significant high, and the main point here is that because there is sufficient growth in that area, FIs are unlikely to let go of that ownership like they have done in the case of pharma, where there was some fundamental shift, of course. Now here is a chart showing you the top FI names: Tata Global, Britannia, Hindustan Lever, ITC and Page Industry, and you can see that except for ITC, most of the others are clustered near the top. This is true for most other FMCG stocks as well. So, which clearly means that FMCG majors are continuing to maintain their uptrend. ITC, for reasons of its own, has been a little bit of a laggard. So there is good scope for people to hide in FMCG if the market were to actually take a hit from the current levels. And within that space, if you look at Tata Global, has been a big recent winner, but that has also started pulling back a bit. Hindustan Lever, which is the green line here, has been maintaining its leadership status for quite some time and is more than likely to maintain its leadership. ITC, which is another significant heavyweight within the space, I think it's a stock which has collected a lot of shots in recent time, significant underperformance vis-a-vis the rest of the stock. I think if people were to seek out FMCG as a hiding place, it's possible that there could be some shorts to be covered in ITC and some adventurous new long buying. So maybe ITC and in a weak market, I think when FMCG proves to be the place for good defensive bets, I think Hind Lever and as well as say maybe ITC could be good bets to actually get into. Hind Lever on the basis of continued uptrend, ITC has room to improve on the basis of some short covering plus some adventurous new buying.
Okay, Dr. Narayan, thanks for that analysis and insight.